Hi, my name is Janet Minke. I'm with Alliant National Title Insurance Company. We're a regional underwriting company. My role with the company is Vice President in charge of underwriting support services, which besides answering questions for our agents, I also do teaching and training. I have been in the title insurance industry since 1970. So the original act was to give consumers more information about their real estate transactions so that they could be better shoppers. And when the regulations changed dramatically in 2010, it still had the same purpose. And now in August of 2015, a more dramatic change happening, still the same purpose. But the change that's happening now is much bigger. And so to sort of put it into perspective, it has to do with federal legislation that was adopted called the Dodd-Frank Act. And the Dodd-Frank Act was designed to solve all the problems in the consumer financial arena. And as a part of that, they formed the Consumer Financial Protection Bureau, which everybody here is called CFPB. And they consolidated a number of regulatory agencies that had been separate under this one regulatory agent. So CFPB is huge. It's responsible for what the VA used to do, the FHA used to do, all kinds of things like that. They all come under CFPB now, so it has a lot of initiatives that are related to protecting consumers in their financial transactions. Now, in the industry that I'm in, the real estate industry, title insurance falls into the real estate industry. Where we're most interested is where it interacts with our industry. Up until this August of 2015, the last couple of years, most of the changes that CFPB's been putting in place have to do with mortgage lenders, all right? And gee whiz, right at the time they're doing it is because Dodd-Frank came after we had our financial kind of collapse, and so there was a knee-jerk reaction. We've got to do a whole lot of things differently. Consumers are making bad credit decisions. They're being preyed upon by bad actors. You know, we need to protect the consumer. So CFPB was charged with that responsibility, and they started a number of initiatives, several of which went into place for mortgage lenders last year. The being sure that the borrower has the ability to repay a loan that he takes out, making sure that mortgages meet a criteria to be a qualified mortgage, all of these sorts of things. Along that same line, in April of 2012, CFPB was kind of hitting its stride. It knew it had this charge that it had to lead, and it issued a memo or a bulletin, and they issued it to all supervised banks and non-banks. All right, so it was sort of a very broad memo that basically said, we expect certain things of you in regard to your interactions with consumers. And it gave kind of a laundry list of the things they expected. Part of the reason for that was during the financial collapse, a lot of the mortgage lenders who had perhaps originated less than stellar loans that now had troubled borrowers who were losing their homes in foreclosure, and the whole country was suffering as a result, said, well, it wasn't us. We had these other people who were originating loans for us. When foreclosures were not being handled properly, there were a lot of newspaper articles, a lot of press about bad foreclosure tactics. Well, that was the foreclosure firms that we handled. It was the mortgage servicers who weren't letting the borrowers know how they could keep their homes and all this. So basically they were saying it wasn't us, it was somebody else in CFPB, and this bulletin basically said it's your job to supervise and manage those that you hire to interact with the consumer on your behalf. So they set this stage for vendor management, for saying if you hire someone to interact with a consumer on your behalf, then it's up to you to be sure that they have the skills, the qualifications, and that they know what the laws are with regard to the consumer, so that they would be doing all the things that we're holding you responsible for doing on your behalf. So this kind of gave rise to the ALTA best practices. Because although we never really felt like as settlement agents or title agents that we really were in that same category, we weren't servicing mortgage loans, we weren't handling foreclosures, we weren't originating, but the consumers were coming to our closing table, and we were preparing the settlement statement that their transaction was going to be based on. And so we do interact with them. We record the mortgage, we record the deed, so we have an interaction with the consumer that might be construed as acting on behalf of the lender when their loan is being closed at the settlement table. So the American Land Title Association, ALTA, said, you know, we need to help our members address this issue because the lenders are now starting to look at them and saying, we aren't going to be able to have you close our loans if you don't pass the muster with regard to some sort of certifications. And ALTA said, gosh, that's kind of tough, and maybe we should be involved to assist them. And so they formed a committee or a task group, and right about the same time this bulletin came out, they started working very hard on saying, what are the areas that we need to be sure that we can show a lender and perhaps the compliance end or the regulatory end who regulates that lender, that we know what we're doing, that we're handling the consumers and the lender's money properly, and that we're doing what we ought to do. And they came up with the 7 pillars of the ALTA best practices that address 7 different arenas in which we should show that we were acting properly and that we knew what we were doing. The message all along is we expect you to be compliant, and if we find out that you're not, then you're not going to be happy with the results. So CFPB has an enforcement authority where they can go in and enforce their regulations, and what it actually means is they can fine you if you aren't doing it, and they don't call it a fine, they call it a settlement. We've seen some relatively large enforcement actions with some pretty large mortgage lenders that's made a real believer out of them that they want to be sure that on any kind of a go forward, everything they do is dramatically compliant. Say Wells Fargo, for example, Wells Fargo Mortgage Lending as opposed to Wells Fargo the bank, and they're saying now we have to do the same risk management that perhaps our banking partner has been doing in the past. So what's the risk? Interestingly enough, CFPB, not in any of the material that they've put out, but in verbal statements that they have made, and also the big mortgage lending companies, particularly Wells, and I keep using them as an example because they've been more verbal with what they're going to do. They've been more open, they've issued more public announcements than the others. The others have kind of followed suit because Wells have already said it. So I'm not aligned with them, but I do read their press. They basically said we're going to look at it individually. So if you are a settlement agent that closes 10 transactions a month that have a Wells Fargo loan involved, you're at one level of risk to us if you're not compliant. But if you are a settlement agent that closes 100 a month of loans that are either Wells Fargo originated or end up in a Wells Fargo portfolio, then you're a bigger risk to us if you have gaps in your compliance. So when they're looking at the settlement agents that are handling their transactions, they're doing a risk balancing as well. So if you just do 1 or 2 of something, you're not going to create a great risk to someone if you didn't do it properly. But if you have any kind of a volume, then the risk escalates with each new transaction. All right, so we're talking about a product, Our Records, either ourrecords.com or the Our Records mobile app. And so it is a product that is designed to address a couple of the areas that fall into the ALTA best practices. One of the pillars of the ALTA best practices has to do with maintaining proper licenses. So they have a whole pillar just on maintaining licenses. So in Texas, if I'm a title agent, I have to be licensed as a title agent. And every one of my employees who performs the duties of an escrow officer, which is signing settlement statements, signing escrow checks, signing commitments and policies, they also have to be licensed as escrow officers. And in order to maintain their licenses as escrow officers, they have to be on an escrow officer's bond, and they have to maintain continuing education. So in order for me to be able to show and tell that I'm compliant with that pillar of the ALTA best practices, I might have to show not only that I have my license and I've done all the things that I have to do to keep my license, but that all my people are licensed as well and all of their hours are correct. And so it's my understanding that the product, Our Records, has the ability to keep that information for me. And that's great. I mean, I could probably just keep that in my desk drawer, but let's say I'm a title company who's willing to handle transactions no matter where the property is located, no matter where the people are. I might say, I'll handle all of your transactions. You won't have to worry about getting them closed. I'll take care of that for you. And how am I going to do that? Well, the modern thing in today's world is I'm going to do all the work, but I'm going to engage a third-party service, a vendor, typically a mobile notary or a mobile signing service, and I'm going to send those documents to them, and they're actually going to be ones that sit down at the table with the people, oversee the signatures, notarize the documents, and send them back to me. Well, now I'm responsible for making sure that those people that I engaged to perform that third-party service on your behalf for me actually have all those credentials that they're supposed to have to be able to do that. And again, I think that's one of the things that our records has the ability to do. So easy for me to maybe keep up with my own employees, not so easy for me to keep up with all of these others. So we've been talking a little bit about the ALTA best practices and the different pillars in the ALTA best practices, and we talked about the licensing and how we can be sure that all third-party vendors that we engage have the appropriate licenses, and we can show and tell that. But another pillar is the one that we indicate how we protect non-public personal information. And what CFPB is really concerned about, they're really concerned about the consumer and the transaction and their information. But as an owner of a company, I have to be concerned beyond that. All right, so besides just protecting the consumer's NPI that I gather in connection with my transactions, if I have information about other third parties, then I come under other laws that have to do with protecting non-public personal information. And so when I engage with a third party, and I'm gathering all of their information to be sure that they're properly licensed and that they hold bonds and that sort of stuff, I'm gathering a lot of non-public personal information about them. And so having a secure way to keep that information instead of just in a file folder in my desk drawer could be very, very beneficial to me, particularly if it's that person who has engaged the service that's keeping their information for them, and they're simply offering me the opportunity to gather that information by going to the service that they engage. So they've provided their information to a third party, and they're allowing me to have access to that information for the business purposes we're engaging in. What we're thinking about now is, let's say, for example, I'm working on my ALTA best practices, and I've identified this is what I tell agents to do. So I said, take the 7 pillars, and the first thing you do is you simply indicate, what are you doing today? What are today's activities? And maybe a lot of the things you're doing today meet that best practice under that pillar, because in Texas we have a lot of regulations that we've been having to follow for years and years and years. Texas regulates us in our escrow and title activities. So a lot of that, so you go through all 7 pillars, here's what I'm already doing. But at the same time, you're making a gap list of all the things that you aren't already doing but that are on the best practices. So you come up with a list of things and you say, okay, great, I'm doing all those things, that looks nice, but here are all the things that I could or should be doing to meet ALTA best practices, to be able to say, I meet the ALTA best practices. And so then you look down the list and you say, oh, well, there's 6 of the things on the list that I should have been doing anyway. I just hadn't even thought about it. And maybe you then go out immediately and see, what do I need to do in order to do that? And here's where you may begin to look for third-party vendors to assist you and begin to evaluate which vendor might be the best one. So maybe there's only one in the marketplace that does that one thing. All right, so let's just say there's only one in the marketplace that does that one thing, that keeps track of all my licenses and keeps track of all my third-party vendor licenses. And you say, well, okay, they're the only one, but does it make economic sense for me to use a vendor to do that or to do it myself? So then I simply have to determine what's my volume and what's my level of risk. So if, for example, I have my own license and I have 2 licensed escrow officers and I hire a mobile notary twice a year, does it make any sense for me to need a third-party vendor? And the answer would be, well, no. But what if I have 12 or 15 escrow officers and they come and go because they get other jobs other places, and I send out 15 or 20 mobile notary packages a week? Now, how am I going to manage all that? Well, I've made this on my gap. I'm not managing it. So now, is there a vendor? And what's the price to me for using the vendor? All right, and how easy is it for me to interact with the vendor? And how easy is it for the people that I'm trying to manage to be able to interact with the vendor as well? So those would be the questions I'm asking.